Hey, stop scrolling. Right now. Close every other tab, turn your phone face down, because what I'm about to say in the next hour could literally change the trajectory of your entire portfolio and maybe your life. February 2026 is not normal. Ethereum just got absolutely destroyed. We're talking 30% wiped out in weeks, $1,870, briefly $1,746. People are panicking. Twitter is flooded with "ETH is dead" posts. Reddit threads are graveyards. Liquidations are in the billions. Fear and greed index is screaming extreme fear. And right in the middle of this bloodbath, Vitalik is moving thousands of ETH. Whales are dumping. Retail is capitulating. Everyone is asking the same terrified question. Is this the end? I'm going to answer that question today, brutally, honestly, and with zero sugarcoating. But I'm also going to show you something most people are too scared to see. This crash is not the funeral. This crash is the birth certificate. The same pattern that killed 93% of Bitcoin's value in 2011, then 84% in 2018, then 77% in 2022, is happening again. And every single time that pattern played out, the next move was not a recovery, it was a rocket. So buckle up, because in the next 60 minutes, I'm going to walk you through exactly why this Ethereum crash is the setup for one of the most violent, most profitable moves in crypto history. I'm going to show you the data, the on-chain signals, the macro tailwinds, the institutional moves, the regulatory dominoes, and most importantly, what you need to do right now so you're not the person telling the story next year. I sold at $1,800. I thought it was over. Let's go. First, let's get the pain out of the way. No fluff, no hopium, just the raw truth. Ethereum is bleeding hard. We're down over 30% year-to-date from the late 2025 highs. We briefly kissed $1,746, levels not seen since mid-2025. Daily volume is insane, $30 to $70 billion, but most of it is panic selling. Leverage is getting flushed, funding rates are negative, shorts are piling in, and the sentiment? It's not just bad, it's apocalyptic. Vitalik transferred thousands of ETH. Some went to charity, COVID research, but the optics are brutal. Headlines screamed, "Vitalik dumps ETH." Retail saw red and hit sell. Whales saw blood in the water and joined the feeding frenzy. And just like that, billions liquidated. So let me ask you something very uncomfortable. Right now, in this exact moment, do you feel like selling? Do you feel like this is finally the end? Do you feel like crypto, and especially Ethereum, is broken forever? Good. Feel that fear. Feel that knot in your stomach, because that exact emotion is the fuel every legendary bull market is made from. Let me take you on a quick history tour, because the market is a repeating movie. 2011 to 2013. Bitcoin ran from $2 to $31, then crashed 93% to $2. Everyone said, it's a scam, it's dead. Then it exploded 57,000% to $1,150. 2013 to 2017, $1,150 to $19,800. Crashed 84% to $3,200, never recovering. Then 2,000% to $69,000. 2017 to 2021, $69,000 crashed 77% to $15,500. Crypto winter forever. Then 700% to $112,000 plus in 2025. Every single time the crash looked terminal. Every single time the media buried it. Every single time retail capitulated at the bottom, and every single time the next leg was exponentially bigger. We are living that exact movie again right now in February 2026. The only difference? The stakes are higher. The audience is global. The institutions are here, and the upside is about to be obscene. So why is Ethereum getting hit harder than Bitcoin this time? Because ETH is the high beta play. When leverage gets flushed, ETH bleeds more. When sentiment turns, ETH gets punished more. When retail panics, ETH gets sold first. But here's the part almost no one is talking about. The fundamentals never went away. Let's look at the on-chain truth, because price lies. On-chain doesn't. Staking queue, all-time high. That means more ETH is being locked up, not sold. Daily transactions, all-time high. Real usage is exploding, not collapsing. Centralized exchange reserves, all-time low. Coins are leaving exchanges, not flooding back in. Net inflows, hundreds of millions in a single day, while fees are near record lows. That is not a dying network. That is a network under massive accumulation pressure. Wall Street knows it. Fidelity launched their own stablecoin on Ethereum. Morgan Stanley just appointed a new head of digital asset strategy, straight from wealth management. BlackRock insiders, now at Ethereum treasury firms, are openly saying institutions only care about three things: trust, security, liquidity. They're building high-value projects on Ethereum. 65% of stablecoins and tokenized assets are there. 10x Solana. That's not opinion, that's math. So why the disconnect between price and fundamentals? Because markets are manic depressive. Right now, we're in the depressive phase. Fear is maximum. Leverage is getting flushed. Retail is capitulating. But that is exactly when smart money loads the truck. Every legendary rally had this moment, the moment when it felt over, the moment when even believers started doubting, the moment when the weak hands sold and the diamond hands quietly stacked. We are in that moment. Now let's talk macro, because crypto doesn't live in a vacuum. The Fed ended QT. Balance sheet is no longer shrinking. Powell ruled out hikes. Base case is hold, then cut, then potentially cut a lot. Trump's fiscal bazooka is loading. Tax cuts, deregulation, infrastructure, pro-growth vibes. Midterm politics and shutdown risk create short-term noise, but long-term, it's reflationary fuel. Liquidity is coming back. When liquidity returns, risk assets explode. And Ethereum is the highest beta risk asset in the crypto space after altcoins. So the setup is almost perfect. Leverage flushed, short squeeze primed, sentiment at capitulation, classic buy signal. On-chain screaming accumulation, smart money buying. Dominance compression, alt season loading. Macro tailwinds, liquidity wave incoming. Institutional adoption quietly ramping, trillions waiting. Regulatory clarity on the horizon, Clarity Act talks ongoing. This isn't a bear market, this is the final filter before the slingshot. The deeper the pain, the higher the upside. So what do you do right now? Stop staring at the chart every 5 minutes. It's designed to shake you out. Dollar cost average. Every red candle is a gift from the market. Focus on blue chips. Bitcoin first, Ethereum second, then strong L1s with catalysts. Prepare for volatility. We could wick lower $1,500 to $1,700 ETH before reversal. Hold through the noise. The winners are the ones who refuse to sell the bottom. This is not financial advice. This is survival advice. Because when this turns, and history says it always turns, it won't be a gentle bounce. It will be a violent, vertical, life-changing move that leaves FOMO in the rearview mirror. The question isn't whether Ethereum recovers. The question is whether you'll still be holding when it does. So I'm asking you, right here, right now, are you going to let fear write your story, or are you going to write it yourself in permanent ink on the blockchain? February 2026 is the crucible, this crash is the forge, and the next bull run is loading. Drop your battle cry on the comments. Tell me, are you buying the dip? Are you still stacking ETH? Or did this crash finally shake you out? Smash like if you're still in the fight. Subscribe, turn on notifications, because the greatest Ethereum run of our lives is not dead, it's just bleeding, and bleeding is where the legends are born. We ride at dawn. Stay savage. I'll see you tomorrow.